Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. We're looking at the Australian dollar pattern. It wasn't as bullish as Friday's session, with the overnight test clearly rejecting that 78.90 level. As I was mentioned on Monday, that as we got closer towards this very strong bearish outside range day, nearly a key reversal or quite close to it, that the market is finding good supply there. Now from the given pattern, we still need to close underneath the level of around 77.90. Now around that 80.90 level would confirm that the top side was a rejection and we could see another fall back towards that bottom side of the range seen at 76.90. However, we should not jump the gun as in terms of start selling just in case we get a rejection from the current decline that we're seeing at the moment. Not one of the heaviest declines, but still from the rejection does put a bit of a threat to the downside. But the US dollar, which measures the greenback strength against a basket of 6 major currencies, still has to recover since Friday's heavy sell-off hit an 11-week low as it holds and consolidates above 90 figure 20. With the euro weighted at 57.6, we didn't quite break the top side. Now also, like the Aussie, we've got good supply getting close to this level of 121.80.90, with the market a little bit hesitant to take the challenge higher. Could see a bull trap. Now the market doesn't want to get caught at the top side of the range, as we could see a heavy decline due to the MACD being pretty flat, and also the MACD is slightly buckling. Therefore, could see a little bit of a mixed play into choppy price action as we wait now for the US CPI number on Wednesday. But the longer we hold under 121.80.90, could see a slight bearish case. The dollar yen still hovering above this level of 108.45, which is weakened on Friday after it did take a stab there. Nevertheless, the technicals are negative, so I do anticipate another down test. Now, a break of 108.45 and a close of New York, that is, underneath the level, would see a move down to the 107.50.70 region, which I am in favour of. Sterling rallies very aggressively after clearing that level of 139.90 and now finding supply like the other markets, which is around this February area. As you can see here, a little bit hesitant, but with things looking relatively positive in the UK, especially with Boris Johnson winning the vote, that could see a little bit more bullishness to the pound. So we may see a rise up to 142 to 143. That would mean that sterling yen can also rally further, maybe up towards the 39-month highs around 154 to 155. But in all time frames near enough, we are overbought. After taking another stab at that level of 1,844 to 46 in gold, the market is finding a little bit of supply and therefore could see a little bit of a weakness, but don't get too caught at the top side of this range. Due to the ADX still trending, a break above 44.46 would see an extension up to 1,870. Now looking at oil, the market is breaking down after the last 5 consecutive days. And if we see a close under 64.30, which is exactly where we are now, in New York that is, then we could see a test of this trend line. If I just bring it in slightly, you can see it holds quite well and therefore could see a challenge towards this level, which is seen roughly around 62.5. With the technicals breaking down, I am in favour of seeing oil break down a little bit further towards and does support the challenge of this trend line. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report and I hope you enjoy the rest of the day.